2016 is off to a busy start with headline-grabbing exchange mergers and acquisitions, an ongoing focus on regulation, and the continued search for growth. John Lothian News sat down with key exchange executives to get their thoughts on the changing landscape and what's on their priority lists for the rest of the year.
2015 was a big year, as you say, for CurveGlobal, mostly because we became real. we announced, and a number of the stakeholder banks and the other exchanges that support us kind of came out, so we became public. That time we had 6 shareholder banks in the 2 exchanges, the CBOE and the London Stock Exchange. And then when we finally funded and incorporated in January of this year, we ended up with 7 banks. The 2 key priorities for this year, which we're well underway with, are getting live and then getting liquid. Getting live should be a third quarter event for Curve, and we're well on track with there's a choreography, as I call it, that you have with the member banks, with the GCMs, the FCMs, with the market makers, the prop accounts. Obviously the regulators have a role in all of this, and then in the middle of all that, the London Stock Exchange prepares and then presents offers the exchange itself. So our job is to choreograph that whole thing so that when we do go live, there's a sufficiency of activity and liquidity on the exchange. If we look at how the market's made up, you have very different actors, and they have different drivers. So for instance, the banks, the portfolio margining proposition, OTC and listed, is hugely compelling. The banks are under capital pressure, margin pressures, and so on. So we're pretty confident that they will avail themselves of the potential that Curve offers, from inception. But that's not enough. That they alone will not make for an active market. So we need market makers, and we've been contracting with them. And the good news is, there's many firms who seem very keen in supporting what we have to offer here, and they're fascinated by the idea of a new pool of liquidity supported by the banks, who might be looking to get a slightly different thing out of the exchange, but nevertheless will be there. Prop firms as well, getting prop firms signed up, who are again keen to see if there's a basis or if there's just liquidity and an opportunity to trade. If it's a vibrant market, they want to be there. So you have at least those 3 constituencies, and then there's obviously the buy side, various other elements of the buy side, to whom Curve will be variably attractive. If our proposition is really sound, that conflating, putting listed risk together with OTC risk is a compelling proposition. And in addition to that, putting multi-currencies together, risks in many currencies under a VAR-type margin model, where you may get an offset with your euro and your dollar or your sterling or your yen or whatever, and then putting the long end and the short end of the yield curve in many currencies together. If that proposition works, as we believe it does, and if the street is keen to realize efficiencies and saves, we should be very attractive. People genuinely seem not just interested, but sympathetic, keen to know, how can they get involved? Can they get involved? How can they get involved? So yeah, I think the capital pressures that the street is under and the efficiency need that they have means that the old ways of doing stuff, I've been in the markets for a long time, and the ways I learned when I first started working in OTC particularly have changed beyond recognition, and need to change, will change more. So I think a proposition like Curve with innovation and efficiency of putting together, or giving the opportunity to put together listed and OTC risk in a much more efficient way is highly compelling.